So let's start with our two fast questions. The first one, Wall Street set new records yesterday. European equities also are showing good performances in the last session. And is this one the Santa Claus rally which is starting at last, or only a flash in the pan? What can push these markets high, and what could derail it?
Well, obviously we've seen, a significant rebound in the last few days. I think largely as a result of the prospect, of further easing by the ECB, but also the surprise decision by the Chinese central bank to cut rates for the first time in 2 years. I think for this rally to continue, what we need to see is the European Central Bank follow through on its indications that it might continue to operate a very easy monetary policy. At the moment, I think markets are overestimating the possibility that we'll see measures next week. We know that Mr. Draghi would appear to be erring on the side of a much easier monetary policy, but I think what we've seen from the last couple of days is that the governing council have wildly differing views as to how the European Central Bank will come about doing that. That being said, we have seen an improvement in the German IFO data, and that is positive. Some of the French data that we've seen today has also been fairly positive, and I think there is an expectation that we might see a little bit of improvement as we head in to the end of the year. So what I would expect to see over the next 2 to 3 weeks is a continued confirmation of the improvement that we've seen from Germany, and to a lesser extent maybe France and Italy, but also a continued dovish outlook from the European Central Bank. So all in all, I think we can continue to see an underpinning of equity markets, but for that to continue, we need to be absolutely certain that the European Central Bank remains of one mind with respect to further easing measures, and I don't think that at the moment is, necessarily a done deal.
Okay, another argument. Sunday there is a referendum in Switzerland that will decide on the gold reserves of the Swiss National Bank. Which could be the consequences on the euro franc and on the gold?
Well, I think the prospect of the Swiss actually voting, to basically hold extra reserves of gold at the moment looks very unlikely. I think the biggest problem the Swiss face at the moment with respect to the floor in Euro Swiss is if the ECB do announce further measures to ease monetary policy, how will the Swiss National Bank react in trying to keep a floor under the Euro Swiss rate? I think as far as this referendum is concerned, I think it's unlikely that it will be passed. I think it's more likely that the ECB might actually look at potentially buying gold as opposed to sovereign debt. And I think the likelihood is that we could actually see negative deposit rates from the Swiss National Bank in an attempt to try and keep a floor under the Euro Swiss rate.
Okay, that's all for today. Thank you very much.